What is up, guys? This is Yix here, Magnum Crypto, and welcome to another video. So today's video is going to be answering the question of when should I invest, and I'm going to be using some historical data and also the concept of cycles to answer this question. This may seem a bit confusing right now, but allow me to explain. So let's not waste any time and let's get straight into it. So let's first cover the concept of cycles and how it relates to, or how it's in markets as well. So on a universal level, cycles are part of reality as we know it. The cycles on a macro level, like planets, where you've got moons cycle orbiting around the planets, you've got planets orbiting around the sun, and I'm sure on a grand level there's even more cycles there. But if you actually zoom into the planet itself, you've got the planets orbiting the sun and how the sun rises and sets, and how you've got seasons, you've got lunar cycles, and the animal kingdom tends to, or just the planet itself tends to accommodate to these cycles as well. So you've got the sun rising and the sun setting, and how we sleep and wake up according to these times. Even if you zoom in, you forget the kind of macro level. If you zoom into the bodily level, you've got cycles like the menstrual cycle, you've got cell cycles, and you've got cycles absolutely everywhere in reality. And this translates into the market as well. So same way in the market, you've got periods or cycles when price is rallying really high, and you've got cycles when price is absolutely plummeting, and you've also got cycles where prices, it just seems to be steadily taking a break, so to speak, or just stagnating. And in crypto or investment or trading talk, that's called period of consolidation. So at the moment, cryptocurrencies is the crypto market is dominated by Bitcoin. For that reason, the market tends to follow the Bitcoin cycle, and Bitcoin at the moment is in a 4-year one. So the 4 years is split into two years, and I'll show you in more detail. But in the first 2 years of the Bitcoin cycle, it tends to be a plummet or a slow drop to the depths of the unknown, and the second 2 years tends to be an escalator to the heavens. So we're going to go into a little bit more detail in showing you that, and then answering the question of when should you invest. A little spoiler alert, it's now. Right now.
Right, so we are live on the chart. So a quick little introduction in case anyone doesn't understand what they're seeing. This is a chart on TradingView, which for traders allows you to look at price data in the form of a chart. So it's easier to visualize and to spot patterns. I'm not going to explain to you exactly what everything means because that'll take forever, but I'll explain to you the absolute basics. So the basics of basics is 1 bar equals 1 week's worth of price data. So that's all your buys and sells. And the black people customize their charts with different colors. I've made mine black and red, but originally it's green and red. But the black bar indicates 1 week of positive price action, and it will tell you, if you look on the right axis, you'll see that it's 4,000, and by the end of the week, it was about 5,000. So black, we're looking at upwards, and red is down. And on the right here, you've got the price level, and on the bottom, you've got the date. So, and that's the basics done. I'm going to zoom out and quickly show you some historical data just so we can help illustrate my point about this being the right time. So if we zoom out a little bit, we can see the full history of Bitcoin's price data. And this is going to help illustrate my point as to when is the best time to invest. As I said to you previously, Bitcoin operates in 4-year cycles. And the first 2 years tends to be where Bitcoin drops to the depths of the ocean, and the last 2 years tends to be the speedway up to good times. So the way I've customized this chart is I put a line through the month of January of every year from 2012 up to today, and even forecasting in the next couple of years where the 4-year cycle ends. I've also colored the arrows to illustrate the points when it's ideal to buy. So let's get straight into it. Obviously, the red arrow indicates the worst time to buy, and this is the end. This tends to be the end of the 4-year cycle. So as you can see, we have 2 data points to look at: the end of January 2014 and January 2018. So in those months when the cycle ends, we see, or that year, we see a sharp drop in price in both occasions. And the next year or two tends to be the recovery period, or the ideal time to buy, hence why the arrow is green. And the third year I put in amber because the risk has increased quite a lot by that point as to whether you're going to be making a profit or making a loss after a year or so. So this is why I put in amber, because it's more risky and this is a huge warning. So do it at your own risk. So if we fast forward to the current cycle that we're in, starting from Jan 2018, we've had the sharp drop, and this is the lowest point that you could have bought in this cycle. Unfortunately, that is gone now, and we will not see that again, or it's very unlikely that we'll see that again, but so you can forget about that. But we are still in a good period. As I've shown to you here, it tends to be 2 years where you can invest at a relatively low risk, and then the risk starts to climb quite rapidly. So we're at a point where we still have some time in the next year or so to invest with low risk. After that, the window would have closed quite a lot, and it'll be very much a high risk situation. So we are in the first year, and we're almost at the end of the second year in the cycle, and we have 2 years left. Now, as we've said in the past, history will not copy and paste as it has done before exactly, but it will be similar. So as we're almost at the end of the first 2 year cycles, we still have about a year left to invest at optimal low risk areas. The longer we wait, the closer we get to the end of the third year, the more risk there is of investing at a point where you may not make a return after a year or so, and you may be in a loss. So to answer the video's question again, right now is the best time to invest.
This is not financial advice,
but do your own research and invest wisely.
So the best time to invest historically has been near the end of the first year, the second year, and a bit of the third year. But by no means does history copy and paste. It's just never going to be that easy, otherwise everyone's going to be rich. But what tends to happen is it will rhyme. So if you look at the last cycles, it will be similar to that in the future. And if you look at the past, as I've shown you on the chart, it's peaked at the end of the fourth year. However, in the future, it could be it peaks at the midpoint of the fourth year, or the beginning of the fourth year, or even the end of the third year. So it will be similar, but not exactly the same. So that's why now in the next 12 to 18 months would be the best time to invest. But that window is getting smaller, because the closer we get to that potential peak, the larger your chance of investing at the wrong time occurs, and then you'll end up losing money for a couple of years, and that's obviously not ideal. So invest wisely, time it correctly, use history to to make your decision and stay safe. Peace out.